So we've had some Chinese data out overnight, which shows the strength in the export engine. We've also had this op-ed written by George Soros questioning those who go sort of wholeheartedly into China right now and questioning the investment opportunities available there, calling some investments there a tragic mistake. What is your attitude to China? Do you come down on the side that says you just have to be invested in China because it's just too big to ignore? Do you think Soros is onto something that the risks are substantial?
Well, it's very hard for me to comment on this. However, I would say that, China is a major economy globally, and importantly, is very well integrated in the supply chains. It's an economy that we cannot do without, and therefore there are some investment opportunities there. The question, of course, is to size them accordingly and to take position in those places where China is, very well integrated in the global supply chain in certain part of the industrial world. What's happening in the data security law is something that we are, still observing. The contours of it are not entirely yet clear, and it's hard to give a definite conclusion on this.
OK, Geraldine, our own Mark Cudmore from our MLive team was pointing out that the price-to-book valuation of 8 shares has fallen below 1. Is that an area that you would look? Is that attractive now for you?
There are some areas, especially in the green economy, very critical companies in the battery, in the electric vehicle, wind, solar power, which I think are very well essential to the global economy that will play a big role in this net zero world, and I think, should be considered.
OK, so that's where some of the opportunities are. Thinking more broadly about Asia and investment opportunities there then, Geraldine, because, of course, we've had 2 days of quite a lot of strength coming through from Asian equity markets, in particular in China, where tech stocks have rallied, but also very much so in Japan, and this dating back to last week and the announcements politically in Japan. I know that you're quite in favour of exposure to Japanese equities at this point. Is it all about the politics and fiscal stimulus to come, or is it about other underlying factors?
I think there were already a very fertile ground in Japan. First of all, the second quarter earnings season beat pretty much anything that we've seen around the world. Then it is an economy that is very well exposed to all the secular developments, very rich industrial and technology equity market, and therefore very attractive. And of course, what's happening is that valuations there, according to our models, are the cheapest in the world. And you have a relatively stable, jurisdiction. So I would say this politics is just merely a catalyst on a market which had very little sponsorship, yet very strong in terms of momentum in the earnings, as well as underlying sectors. So this is one of the market that we favor now that really is a laggard versus the rest of the world.
Geraldine, there's been a divergence in terms of the policy stance. We're starting to see that, and we'll get more clarity later this week between the ECB and the Fed when it comes to how fast and how quickly they're going to be tapering some of that support. And, of course, divergence when it comes to the state of vaccines. Where does that leave your view in European equities?
We think that European equities have run quite a bit. We're less adamant about them versus Japan. We find the sectoral distribution maybe a little less attractive, and those sectors that interest us would tend to trade at a premium to the rest of the world. So I think at this juncture it's just more of a wait and see, and prefer to redirect investments towards Asia and in particular Japan.